What's up, you guys? It's Matt here. So I know in a lot of investing videos that you probably watch on YouTube that they talk about their profits and they talk about how they got there and they talk about different methods and all that stuff. But I want to give you one simple method that I look at when I'm day trading. And it's not looking at when you're swing trading. It's not looking at when you're long-term investing or anything like that. It's solely just day trading, intraday. This is something that I look at in order to get in and get out. So hopefully it works as well as it does for me, for you, but you never know. It all depends how you do it and how greedy you are, because as humans being, so I'll give you that rule in just a second. Before I start, hit the like button. Also hit the subscribe button for more videos just like this one. And remember that I'm doing a giveaway, which I'll get into all of the detail at the end of the video, so stick around till then. So this is basically my number one rule, my number one pattern that I look at when it comes to day trading. And I know most people won't give away their secrets, but I'm gonna give away my secrets, because as long as you do it right, then everything will be great. Now, I just wanna say that I am not an expert. Yes, I did go to school for finance, for accounting, for business, and I have 4 degrees, but I am not an expert in this area. You want to consult a financial advisor if you are really considering, getting into investing. But, I'm just here to give you some sort of outlook on how I start investing. So no way is this financial advice. Just trying to let you understand what I look at when I'm investing. So let's jump into it. So the one rule that we're looking at, the one pattern that we're looking at that a lot of people try and steer away from, are gap ups. And I see a lot of gap ups, a lot of very, very fast movement in the beginning, in the first 5 minutes of a day. And even up to 30 minutes, you're gonna see it. So what I see is a large gap up, and it continues to move up, it continues to move down. It's either gap up or gap down. Now, when you see these gap ups, it's not really realistic that it's going to stay in that area, whether it's down or whether it's up. People are aggressively buying or aggressively selling, and this is not what you want to really look at. A lot of people will say, steer away from this. Don't invest in the first 5 minutes. Don't invest in the first 30 minutes because it's very volatile. But that's probably when you want to invest. If you're looking for a quick, small profit, then you could probably invest very quick and get a small profit each day, which build up to a large profit over the long term. So I love to do this, and maybe I'm wrong 2 times, but if I'm right a lot higher of an amount than if I'm wrong, which hopefully that makes sense. It sounded like it makes sense, but hopefully it does. So basically with this move, I'll put something up on the screen that shows a gap, but basically with this move, you're gonna see a large drop or a large incline, and well, not even incline, it's just a large gap up or a large gap down. And then what's gonna happen is it's gonna continue to move, but eventually it's gonna hit a certain point, resistance or support level that you just need to invest into to get a really quick, bounce back. And that's usually what happens. Now, you do want to set some sort of a stop loss, but I'll pretty much get into that in a little bit. But you want to play the bounce back. And the bounce back is very, very risky if you don't play it the right way. But I have a lot of success with it. And if you find a way to play it in the right direction, it works more for you than if it fails. So like I said, the price more likely than not will come back. There are times to where it just sticks to where it's going, and it went up in the pre-market, it went up in the post-market. This is just something to dabble in right from the start. And this is kind of what I do now, but I do look at other things in the pre-market. A lot of times I wake up early and I'm looking at other things that are happening. But if I see a large gap up out of nowhere, then most likely I'm gonna play the bounce. I'm gonna see why this is happening, and I'm gonna try and play the bounce. I'm bringing up all my simple moving averages, and I'm gonna try and play the bounce back to another simple moving average. This is the way that I do it. I'm not saying that you have to do it this way, but it works for me a lot. Now with this, it actually requires a lot of quick calculations. It's not something that you could just jump in and just say, all right, they gapped up, now I'm just gonna bounce back. You need other calculations that are involved in this. You need to look exactly how the chart's moving. You need to look when does it get to a point to where you have like an indecision candlestick. You need to look at a lot of things, and you're basically doing all of these things on the fly. You need to know what your profit target will be, what your stop loss will be. You need to know all of these things, and if you don't know everything that's included in there, then you're gonna fail. And that's actually my next point, is to know what your profit target, know what your stop loss will be. Because if it's quick like that and you're moving up $5, right, and you wanted to play the bounce back of, you know, $1 or $2, whatever you're looking at, then you want to make sure that you're hitting the right profit target, but then you're also hitting the right stop loss. Now I'm going to go through what the right profit target and what the right stop loss should be. A lot of people will think that, you know, you hit a profit target and then they don't even know what a stop loss actually is. So their profit target will be $2, but they don't know when to stop if it goes in the wrong direction. That's what a stop loss is. So basically what I say is, like, if I have $1, for me, this is for me, there's two methods of it. So you can either have a 3-to-1 profit to stop loss ratio, or you can have a 5-to-1 profit to stop loss ratio. So this is something that I look at. Basically, if I want to jump up $1, now this is $1 per share, then I'll only want to drop down 20 cents. If I want to make $100 total, which would be like 100 shares of, you know, $1 movement, then I would only drop $20, which would be 20 cents at 100 shares. So I would only risk 20 cents to make $1. Now, that's the way that I look at it. Other people will look at it at a 3-to-1. There are other ways of looking at it. You could do a 2-to-1, but I would do more of a 3-to-1 to 5-to-1, because I would actually push more to 5-to-1, just because you're giving yourself 5 chances to get it right. That's basically it. So every time that you get to that, you know, $1 mark, or you want to get to that $1 mark, you have 5 chances to get to that $1 mark in order to break even. So if you're right 2 times, you made out on the deal, and you only have to be wrong 10 times after that. So this is something that I really like to look at. It's just a simple form of math, and that's not something that I solely look at, but it is a great place to start, is to set a profit target and a stop loss. So that's really my number one rule. The one pattern that I look at all the time are gaps. Even throughout the day, I still look at gaps. Do I invest on those gaps all the time? Not really. Most of the time that I'm looking at gaps are in the morning when it's more volatile, because the more volatile that it is, the more you can get in and out, and the better position that you can get. You can move up or move down very, very quickly and make your decision very, very quickly. I like to move on the fly, get things done, and then go about my day. So that's why I like really looking at it. I really love looking at gaps, but it's very, very risky. If you are going to do it, I would say do it with a low amount first, see how profitable you can be, and then, you know, move into higher amounts, higher shares. So again, this is not financial advice. I'm just showing you what I look at when it comes to day trading in the morning, and, you know, that's it. So hopefully you do like this video. If you do, please hit that like button. That helps me out a lot. Also hit the subscribe button for more videos just like this one. And remember that I'm doing a giveaway of 2 Amazon gift cards when I hit my 2,000 subscriber mark. So make sure that you hit that subscribe button. That helps me out a lot, and it'll help you out a lot. You get great content. I feel like it's great content, but you get content that you can watch. So hit the subscribe button. But I'm gonna have to get out of here, and until next time, I'll see you guys later.